the firm's financial managers are responsible for. So maybe you can take it in line of what are the roles of the financial manager, because those roles are going to apply to the business functions and the decisions of the business. I can start with 1, deciding the capital structure of a business. Okay, deciding capital structure.
Organizing resources.
Okay, that's also correct. Let me just explain capital structure. Okay, when we talk about capital structure, we're talking about how much equity financing and debt financing the company is going to use. Okay, if you're an entrepreneur, okay, capital structure for you, how much debt, so that's in terms of loans for your businesses, and how much of your money they're going to use. Okay, so you can say, okay, I want to use all of my money for my business, so that's 100% equity financing. Okay, if you say, okay, now I want to get loans for my business without using any of your money, that's 100% debt finance. So you can mix the two. Similar with a business, they can mix the two. The two. Equity financing is selling the shares. Debt financing, loans, or selling the debt on the securities exchange. Okay. Yes, Mr. Kasone said organizing resources. Yes, organizing resources. What kind of resources? So that when you put this, you get the full marks. Organizing resources. Yes, what kind of resources?
They're also helping risk management, identify how to mitigate the risks.
Yes, in risk management, as a business, there are a lot of risks you face. There's the liquidity risk, where you're unable to pay for your short-term liabilities as they fall due. If you're an international company, okay, foreign exchange risks. Okay, you've also got inflation is also a risk, even interest rate risks. Okay, even insurance, you need to insure your company to protect it from other risks that can occur. So risk management. Now we're still on this part for organizing resources, colleagues, because in the exam, if you just put organizing resources and you end it there, you're not going to get any full marks. So what kind of resources are we organizing here?
Financial resources?
Yes, financial resources like money. What else?
Maybe investing decisions.
Just add more salt to that answer, so that just add more salt to it. I agree with you, but it's just better you add a bit of more salt. So basically, mean investing decisions like investing in capital, like in new equipment, a new factory. Okay. So we can say investing in assets. Okay.
Maybe also for companies, maybe public companies that offer shares. They need to look at the dividend decisions. How are they looking at how much are the shareholders getting, and how much stuff like that.
Yes, or whether to pay or not to pay the shareholders. Okay, dividend decisions. Okay, remember, as a company, it's not good to not pay your shareholders. I believe all of us, if we have to get shares in a company, we'll be expecting at least dividends every year. Okay.
Managers are also involved in financial planning, like analyzing the performance.
Yes, financial planning and budgeting.
Ensuring that everything is aligned according to the strategic goals.
Yes, where you budget for the year, okay, you make cash flow forecasts, you also make some predictions, okay. Yeah, in those lines, budgeting and planning. Remember, planning is just thinking ahead, okay. As a manager of a company, you have to think ahead for you. You want your company to grow, okay. Because remember, what did we discuss? That is the main aim of financial management. Do we remember shareholder wealth maximization?
Yes.
Yes.
So basically most of these rows here, they're in line with that. Okay, shareholder wealth maximization. Yes. And what do we mean when we say shareholder wealth maximization? Because if you just know the term but you don't understand what it is, that's not good. What did we say shareholder wealth maximization is?
Maybe increase dividends.
Yes, increasing dividends. Increasing share prices, yes. And overall, growth in the value of the company. Okay, because increasing dividends and share prices. Because remember, once a company's share prices increase, okay, when we're going to look at business valuation, okay, market value of equity. Remember this term, market value of equity. When your share prices increase, okay, and you multiply that by the number of shares, okay, that is the market value of the ownership of the business, the equity, the owner's stake. Okay, so when you want to value a company, you can value it like, you want to say, okay, I want to sell this company. Then you're thinking, what price should we charge? You can say, okay, let's value it on equity and debt. So you're going to get the value of the shares, number of shares, and the share price. Okay, you get the value of equity. Even for debt, the debt that's traded on the Lusaka Securities Exchange, you just get the number of units of debt or the number of bonds, multiply that by the share price. That's the market value of debt. Then you can now value your company. Okay, so increasing share prices and paying out dividends. Okay, so that the value of the company is growing. Okay, any other?
Also, financial managers, they report to the board or management, so they need to prepare financial reports and statements.
Yes, and also evaluate also those financial reports and statements. Okay, in the report, yeah, you evaluate that. So that's correct, madam. Yeah, preparing financial reports. You go through the financial statements, the income statement, the balance sheet, and also the cash flow statement. Okay, colleagues, do you know why the cash flow statement is, like, I would say most people say that's the most important statement? Even like when you go to the bank, yes, you can have your income statements, but they'll always ask for a cash flow statement. Do you know why that is?
I'm just thinking about So for me, I would relate it to if you go to a bank here, they always request for a payslip. So they want to see how you are counting the fare in terms of transactions, and if it's quite big. So the cash flow is just to see how the company is flowing in terms of cash. So again, they're able to give you, they're able to have confidence in this company. That's how.
Yes, you're in the correct line. Basically what you're saying, the cash flow statement shows the money that actually came in and the money that was actually spent. The income statement and the balance sheet, they are based on accrual based accounting. Okay, so that sales revenue that you see there, sales revenue, remember it's credit sales and cash sales. So it doesn't mean that you've got all of that money there. Okay, even that net profit you have there, it doesn't mean that you actually have that as net profit. Okay, but the cash flow statement doesn't go out with accrual based account. It's showing money that actually came in and money that actually came out.